Good morning or good day, wherever you are. Welcome to our global webinar series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is every day the same, quick and smart, so let's have a nice start like every day. And today, it's Friday, 7th of December, 2018. Welcome to Admiral Markets. We will start like every day with our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the long version of our risk disclaimer, just visit one of our regional web pages, for example, admiralmarkets.com, and you will find the long version there. If you're in the European Union and you'd like to see and read more about the different offers and options for retail clients and professional clients, what is still the topic of the year 2018 because of the European-wide ESMA regulation, you can find also some information more about that on our web pages. Or a picture shows more than 1,000 words. The margin requirements could be quite different. 2 prominent examples, DAX 30 or also Euro Dollar, 2 of our top instruments. So if you're a professional trader and you like to get the professional client status, you can apply for that if you are eligible on our webpage. Retail clients still have a big benefit. It's called unlimited protection against negative balances, what professional clients don't get via regulation. But some brokers and of course also Admiral Markets offer something additional. We call it negative balance protection policy, and via that also professional clients get a protection up to 50,000 British pounds, what is around about 70,000 euro. Again, all details on how to apply for it on our webpage, and here you see the specific link. This is me, my name is Jens, my English made in Germany, so we are a big international Forex and CFD broker. I'm the German guy, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday it's Jay's day, on Tuesday it's Paul's day, on Wednesday it's Giancarlo's day, on Thursday it's Marco's day, on Friday it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. Some examples, DAX 30, triple spread of just 0.8 points. Euro Dollar, triple spread of just 0.6 pips, and no dealing desk, no minimum stop distance, and STP. Check it out on admiralmarkets.com. And if you'd like to see what we are doing globally, yes, we have an office in Chile. Yes, we have offices in the European Union. And yes, we have an office in Australia. Check all the offers out if you'd like to do so. It's your choice. And yeah, I don't have a picture of Dirk today, but now it's the time for the Dirk, the day trader of today. Good morning, good day, Dirk. What's your view to the markets today?
Yes, good morning, Jens. It's not Jay, it's Dirk. Okay. I suddenly got a little bit confused seeing the picture. All right, let's start into the new trading day here. A couple of hundred points down the road. Interestingly, last Friday we spoke about possible targets to the downside, and we spoke about some Fibonacci projections, which I marked black here on last Friday. And as you can see, we already scratched that one. And this one is something like a stop, not a stop, something like a support zone, a bigger support zone. And you may question yourselves, what is this pink line? Where is it coming from? Just closing that one here and going back to let's say weekly chart, and you see that's a longer term trend line. If you're going to the monthly, you'll see a couple of lows here, combining those lows, and you will see that's a trend line going up the road. And if you check that out on a daily here, you will see that this trend line is already tested, already scratched. The blue trading box I just marked last Friday for the possible targets for the bears, and right now we are better be looking up the road, because if we simply scratch the line again, going sub those 10,500s, we might revisit older lows from the year 2016. And if you remember those days, the Chinese markets took a big dump and the European markets and the US markets followed. And if you remember, there was a low at 11 of February 2016. You may see that stuff, of course, in the monthly chart, and you see those lows around here. Just let us just check out the levels. I'm not speaking about the low here, I'm speaking about the low of 8699 on the Xetra DAX, so 8695.80, so old February low from 2016. Before we start into some technical details, what was going on with the market on Thursday, a lot of rumors, a lot of stories have been spread. First of all, most important thing should be this war of words, and combining that with a so-called war, let's say be beyond or behind the trade conflict between China and US. This is kind of a Huawei deal, Huawei case, let's say, is a bigger deal than anybody expected, because it deeply shows the confusion, and it deeply shows the diplomatic problems between China and the US. And this lady is the chief financial officer from Huawei, got picked up in Vancouver, Canada, and the U.S. Tried to detain her to back to the U.S. and in front of the U.S. court, just due to the fact that the Huawei company might be violating Iran sanctions. So that is the case. The markets really went down 3.5%. Let's see what the DAX yesterday tanked down in direction. Let's just see where is it. It's 3.48%, and almost 390 points got melted down yesterday. So let's check some data. Years high, you already know that, of course, 13,596. Nothing changed so far. A new year low at 10,762. And combining this is the move of 21%. So that's not only a correction. Everything above 20% is not a correction anymore. So we better be going back up to have something like a little small Christmas rally, or let's say a move upwards to just neutralize those losses from the last weeks. Just be aware that we simply have 2 weeks to go, and it's Christmas. So 2 full weeks, and the year is almost over. So that is something a lot of guys at the markets should be aware of. And of course, if you see funds and if you see hedge funds, and they might control their percentages and their losses or their winners, and simply cut some positions, of course, due to the fact that it's almost close to the year's end. So it could be some shorts, could be simply cut off, so the market maybe could go back a little bit more up. So some technical resistances. You see the resistance 2. That's from Xetra DAX. 11,180 is resistance 2. 10,995 is resistance 1, and pivot point right now here is 10,879. Supports, as you can see, 10,694 and 10,578. EMAs, so-called exponential moving averages. Classical is 100 and 200, as you can see right here on the board, 11,796. So very close around that year's low. Let's just check out if some open Xetra DAX gaps. Those gaps are the older gaps I already showed you last Friday. Talking about current gaps. If you look at the Xetra DAX, you will find a couple of gaps beginning from December. Even from the 3rd to the 4th, there's a gap. From the 4th to the 5th, there's a gap. From the 5th to the 6th, there is a big gap, as you can see from yesterday. And all those gaps could be possibly closed, of course. And if you just like to see where the level of just check that out at the other screen here for you guys. If you like to hear where the possible gaps are all closed, this is around 11,457. So 11,457, just marking that. That might be something like nothing like misunderstood. 11,457. So all Xetra gaps are closed. So this is just for the Xetra stuff. Okay. Some of those levels we will see if you can just squeeze that chart right here. And possibly we just take another Fibonacci analysis here from the last low to the last high here. Of course, doing that in a 4-hour chart just to make that more visible for you guys. Let's see, that's the low. I'm checking out this low. That's the last low here, year's low, and the old year's low. And going back to this high here, you can see the high at 11,568, so approximately 11,569. And those two make a combination for Fibonacci analysis to the downside, as you can see here. This last low here, this new year's low, is scratching that 138.2 Fibonacci. And if you can see that to the downside, more to the downside, just delete that trading box here just to make it more visible. Let's see if that horizontal line is going to be picked up at around 168. 161.8 is a level of 1066. So possible targets to the downside here in direction to 10,660s. Possible reversal up the road to be scratching that ascending trend line here, longer term trend line, as I spoke about this morning already. And what is going on? Of course, 14:30 CET today, we got the non-farm payrolls numbers, and if you check out a lot of forecasts from analysts from U.S. investment banks, they were speaking around 200, 205, 210,000 payrolls the opening in November. If you check out the data from ADP from yesterday, Thursday, that might give you a hint that this kind of a number could be rolled out so far. So 200,000 new payrolls could be really possible. If we are getting some kind of disappointed right here, and the number will be sub 180,000 or even 150,000 because of revisions and stuff like that, we possibly could get a little bit more spike up the road, because the market would be surprised that the numbers are bad, and the Federal Reserve might be more dovish in the next month to come. So that's the fact. All is around data-driven. The Federal Reserve is still data-driven, and that has to do with DAX. That has to do with all the U.S. markets, because it's the most important central bank of the world. So the more the Fed is dovish, the more it is positive for the markets, for the stock markets, and the more it is positive for the European stocks and even for the German DAX. So let's see if those non-farm payrolls disappoint, and let's see if that non-farm payrolls give us a little bit of a hint about wage inflation. The targets to the upside, as I already marked that one with the etc. Projections from the resistances. So the 61.8 level could be a nice target for the next 2 or 3 days. Let's just take that as a so-called trading box again and mark that one. So that could be a nice rebound to that scenarios here in direction of 11,200s, 11,220s. Okay, going back to a couple of trades from last Friday, we opened a gold long, spoke about targeting the upsides in direction 1240s, 1270s. If you see those projections and you see those Fibonacci projections, this is kind of understandable that we have projected that in direction to 1270s and in direction to those 1260s here. In my case here, I simply took in my case, I simply took the order out, and I simply took the position out. My iPhone is going to speak with me for some reason. Hold on a second. Okay. 1240s, and I took out the position at 1240s just for the reason because of the non-farm payrolls today, because I don't want to be cut off and get out of the trade with a loss, or with a, let's say, with being flat. So the only reason I just took that off is a nice win, in that case around 300. Okay. Further projections up the road, of course, if you squeeze the chart more, you see 61.8 levels. This is not too realistic in 2018 so far, but in case of the 161.8 level, it's still manageable until the end of the year, possibly, if that Fed policy in direction of a dovish Fed is going to be rolled out more. All right. Let's have a look at the Brent contract. We spoke about that Brent's crude last week as well. This is still hovering around, and still not very clear signals from the OPEC. The OPEC meeting yesterday didn't give out the projections of the production cuts so far. So let's see what happens in the next hours to come. They're still waiting on some commitments from Russia. And so far, they might be cutting. Still, this will speak about a production cut around 1 million barrels a day. If that happens, if that turns out to be the fact, the Brent crude price could go back up the road and maybe scratch that 62 level and going back up in direction of the old lows. Of the old lows is the old low right here. That 100 FIB here is around the 70 marker. So it could take a couple of weeks to get there as well. If you check out the so-called Fibonacci tools and analysis, you might have a look at the Brent February contract. That one is the major contract being responsible for the movements right now, because that is the most traded contract out there, future contract. And this one made a high, a year's high at 85.89, and so far a low at 57.78. If you combine that with a Fibonacci analysis, you get these kind of resistances and supports right here. And if you check out the level right now, you simply see that we are around the pivot points from that one. And the first bigger resistance is 64.40s. So if you just mark that in direction 64.40s, you might see that's a little bit more up the road here, and not very much surprising, a little bit more up, just above that 138.2 level from this analysis right here. All right, that's the fact that we simply bet on let's say a speculation bet on the direction to the upside, because that Brent crude price is really very much sold. And if you think about the dailies, or even you go back to the weekly chart, you see that the relative strength index gives you a hint about the oversold territory on the weekly. Of course, some little bounces made it more neutral here on the daily perspective from the relative strength index, but on the longer term, this stuff is still oversold. All right. Going back to Friday as well, we spoke about that Euro NOK. Of course, it's just an information. I gave you information that this one is 61.8 levels, possible reversal to the downside, so that you guys might sell the 61.8 level. So far, that worked out fine, really well. And as you can see, this is not only a thing for a day trading perspective. This could be also a topic for longer term scenarios like swing trading, or even like a carry trade, just because of the reason that the NOK is giving you more interest rates than the euro, of course. So that gives you a positive swap day by day. So that's just another point. Okay, so talking about a new order system, a new order. And we are just working on that one, looking at the weekly chart first. And the Bund future, we are speaking about the Bund future after that contract rolled into the next month. We just check out the longer term Fibonacci's from the high to this low here, giving a combination. Just check out if that is the right low. So the low right here is 156.20s, and the record high is the 168.82. And we are really getting closer to that 61.8 level again. So this is a 61.8 level trade again. let's just mark that with that blue trading box here, and think about going short around this 163.20s right here right now. Could be the right way to do it. Of course, you can do that with a pending order as well, and just type in the short into the 164 level, or better be just shorting it at 160. At 163, so just doing it just for the old way, just right now, opening 2-1 to last year with a pending order with a sell limit at 136.98. Just place it. Oh damn, I forgot the stop loss. Jesus Christ, I forgot the stop loss, the most important thing. And the stop loss scenario, of course, is when you modify your order is above that 61.8. It should be something around 164.30s in that direction, so that you better be protected with that one, with a 64.30s level. All right. No take profit so far, because it could be getting bumpy more to the downside. In case of there is some change in the European currency, euro. You guys maybe heard about that the Italian finance minister Tria possibly is he's thinking about to resign. Maybe just during we talk here, maybe he already resigned. I don't know that one, but it's a rumor spreading around the markets right now. And just be aware that the next finance minister is possibly maybe more negative for the euro. You never know. You never know. Besides the fact we have the European Central Bank deciding next week on Thursday, so the next interest rate decision of the ECB is due for Thursday at 13:45, and the press conference at 14:30 CT. So that is definitely a big red point on your calendar for next week. You better be checking out that date and that time. All right, this kind of a trade setup should be valid until today at the closing. Before the closing of the US markets, you should be simply close that trade or the pending order as well, and try to figure out if you might re-enter or reposition that one in the next week. Don't let nothing left open, please. No trades open over the weekend, because you never know what will be happening with a couple of stories around between US and China or whatever the heck is going around. All right, Jens, I spoke about a couple of markets. Maybe there are some questions about some markets, some special markets.
Just take a look to the clock. The time is our limit. So I thank you for today. Tomorrow is another day. And like I say every time on Friday, but tomorrow is weekend. So I wish you already now to the early hour a nice weekend. The next live webinar, Real-Time Daily Traders, will be on Monday at Jay's Day. Jay is more from the trading style about the institutional Forex view. So if you like to see an institutional view, just visit us on Monday, same time, same place. Greetings from Berlin office. Thanks. And if you like to see and watch that again in a couple of hours, it will be available on our YouTube channel. So maybe on weekend you have a little bit of time to watch some YouTube videos from us. youtube.com/Admiral Markets FX. Greetings from Berlin office. Bye bye.
Bye bye, guys. Happy weekend.